So I saw this very interesting theory saying that we could set in the new low in around October or November. Now, while a lot of you may think that's way too early, that's, only a couple weeks away, it is also important to look at the various different types of theories and factors in the markets to help prepare ourselves for anything that could possibly happen. So with that being said, we're going to be looking into those factors, that theory, and then also some other things to consider in terms of setting ourselves up for the best that we can in these markets. Now, as always, if you guys enjoy the content, make sure to subscribe and like the video down below. In the comments, leave us what you liked and what you didn't like, and let's get right into it. So before we actually get into it, I want to give credit to Raoul Pal. This is where the thread came from when he's looking at the lows and when they could be set in. Now, when I was reading this seemed very interesting to me, and I thought it was something that I could bring to your guys' attention. But without wasting any more time, let's get right into it. So the main thing and the main topic that he kind of brings up, I'll link his tweet in the description below so you guys could check it out yourself. But basically what he's talking about is that if you look back at the main lows, right, the main market dips that happen, they typically happen anywhere between October and November. And what he's really trying to point out is that they usually happen in October. So what we have here is the 1929 crash, which everyone knows was one of the worst financial crashes in the markets. And if you look, it happened around the time frame of October, November. The bulk of it was in October, and then the final low was set in the middle of November. The next chart that we have is 1974, which again is very similar to this one. Again, we're having high inflation problems. They had the oil embargo, and there's a couple other things like stagflation that were taking effect into these markets. Another really interesting thing though is that while the market was dipping for several months, we could see that the low was set in October, and all the way from the high of right around here in the middle of June to the low in October being set, it was down around 33%. And again, this was the S&P 500. Fast forward around 13 years later, 1987, again, still facing that high inflation and not recovering from the 70s, right? We're still in the effect of that. Again, the lows were set in the middle of October with a massive capitulation coming. Now, fast forwarding a little bit more, in the early 90s, obviously we know that there was another recession in the United States, but this one's focusing a little bit more on the Asian financial crisis. Basically, this is when a lot of their monetary fiat currency got devalued, and again, it hit the global economy. But another really important thing is that from the top to the bottom here, which again, in the bottom, you could see that it hits in the middle of October, but it falls around almost 50% in just the S&P 500, which is yet another drop. Well, fast forward to 1997, this was yet another recession that we had going on a little bit before the dot-com bubble burst, which that burst did not happen in October, or those lows did not happen in October because, as we know, the dot-com bubble just continued to fall and fall and fall for actually multiple years. So that one was a little bit of a doozy. But looking at 1997, what we could see is that obviously the lows were set in, let's say, early September. And then again, once again, that double bottom here in the middle of October. Now, taking a step away, but looking at the Russian markets, obviously this is one of the worst crashes that they've ever experienced, around 99% of a dip. The fastest and the largest dip that we've known in some of the financial markets in history. But again, when you're looking at it, the dip finally set in right here in around the early parts of October. So another thing to keep in mind, not just being the United States markets. And of course, the most famous crash that we know, because most of us have been a part of it, is the 2008 global financial crisis. Now, if you come to recollect, financial crises are the worst, right? They're the worst recessions and the worst bear markets because of all the money and liquidity problems that we're having that come along with it. Now, this one is a little bit different because it happens in later November. But again, that's part of the theory, is that October and November are really good dates historically for recessions and bottoms to take place. Now, one other thing that correlates with this is obviously bad sentiment in the markets. If more people are feeling bearish, they're going to be acting bearish. The weird thing about now is that people are saying that they're bearish, but they're acting bullish in the markets. Whereas we actually need to see people acting as the way that they're talking about. And when there's less than 20% net bullish sentiment in the markets, obviously you can see this green highlighted zone being that, and this white line is kind of the graph that sets in right here. This line is the negative 20% sentiment, and you could see we just crossed below it, which also coincides with massive dips and recessions in the S&P 500. And then to end off all of these charts, obviously you can see right now that most of the dips in the prior charts that we've seen have been at least around 20 to 40%. Some obviously more, but those are rare cases. But you can see we're already down 20% as we are right now. And we are coming up on October and November. So that begs the question, are we going to dip a little bit more? Are we going to set in our lows in October, November like we have in so many other markets? Or is this dip going to be a lot different than a lot of the other ones, just, similar to the dot-com bubble, where if we take a look back, obviously we know that that one just continued to dip and dip and dip, where the dip actually started here in October of 2000 and continued and set the low, where would you actually look at it, the lows were set in right around here in October. So that, begs the question, 2 years later, it started in October, and then you come over here in 2002 of October, and the lows were set for the dot-com bubble. So not only were all of the other previous charts in October and November were the bottom set, and like I said before that I didn't think the dot-com bubble was set in October, it actually was. So that gives us even more confluence and attention to that time span. Now, you do have to ask yourself, if the bottom is set in October, November, that probably doesn't mean that we're going to go bullish anytime soon. We just could get a very large capitulation, and then maybe we kind of stay at these levels for a long time. Another theory is that maybe it's not this October, November, but as we go into right around here, these are where the lows could be set, right? This October, November in 2023, because again, we are going through quite a weird time. We could just stagnate, consolidate, maybe drop a little bit lower, and then when we get to the October, November timeframe of 2023, that could maybe be the potential bottom. Now, one thing I do want to bring up, and I've heard this multiple times, and I really do agree with this, and the theory behind it is that we could be reaching pre-pandemic lows. Now, the reason for this is because when you look at the pandemic and what it offered a massive crash that recovered in a V-shaped fashion in just a few months, right? The crash happened right around here, let's say March or February, and then it really fully recovered in August. So only a few months to recover a massive dip that literally took place in February and dipped around 35% and then immediately recovered, which is crazy to think about. So when we're looking at where we're at now, obviously all the way from the top, we've dropped around 25%. If we drop that 40%, just like many other markets, that could bring us down here, which again, I have this orange line marked up to pre-pandemic lows. Now, Jamie Dimon, the CEO of Morgan Stanley and JP Morgan Chase, he also talks about another 15% drop coming, and he wouldn't be surprised. Now, if we do go another 15%, again, that also leads us to these pre-pandemic highs before the market actually got all out of whack because of the pandemic. So when laying that over with the Bitcoin charts, obviously the pre-pandemic highs are sitting right around here at around $14,000. So that kind of begs the question, is that an area that we need to look at just in case we do have that low that could possibly set in? Now, dropping into the lower time frames, obviously you can see another somewhat of a coiling or wedge effect. I'm not the biggest fan of these indicators or patterns or whatnot, but typically you can see that in the history of Bitcoin and a lot of other assets is that whenever we consolidate in price or whenever volatility leaves the markets, typically right after we have massive volatility come into the market, and it happens over and over and over again. And obviously over the past couple of months, or mainly couple of weeks, we've seen that Bitcoin volatility has been non-existent. We've really ranged between 20,000 and 19,000, which has been a massive range for everything. Now, one thing that we are seeing is that we're kind of starting to, again, lose that volatility. And so what that means is maybe we get a breakout to the upside or the downside. Now, if the lows are set in October, November, and that does happen, I obviously see more downside coming, but I think what we need to experience before that is maybe a bear market rally, something to induce retail or bring back the hype, because it seems like a lot of people are still holding on, right? They still think a bull market is to come and we're not going to drop any lower and that the lows are set. Now, one way to do that is to break out to the upside. Obviously, something that's very obvious to a lot of traders. Break these highs, right? Break that market structure and maybe come up to around 21,000, 23,000, around these levels. And if that happens, then you're going to get a lot of buy pressure continuing to push the markets up. And then maybe that's when the low is set in. So that's definitely something that I would be expecting. It is very interesting that a lot of these market lows tend to happen in October, November timeframe. So I'm not saying it's going to happen. It's definitely a theory and it's definitely probable, but you have to ask yourself, are you prepared for something like that to happen? And it's definitely something to look into. Now, the last thing on that topic that I do want to bring up is that even if the lows are set in, or we do get major capitulation in October, November timeframe, and we do see Bitcoin markdown and the S&P 500 markdown and the rest of the markets markdown, that doesn't necessarily mean that we are going to rise right after that, right? If we have that massive capitulation and lows are set in, or we do experience some lows, we could range down here, or we could range and consolidate in this zone from like 20,000 to 15,000 or 20 to 10,000 for a very long time. I mean, if you look at the past bear markets, the dot-com bubble lasted multiple years. The global financial crisis lasted multiple years. So if we take it from the high, obviously we know that this market, or this bear market, has lasted since basically November of 2021. That's really when the market started to fall, right around this time frame. So if we take it, I mean, we've really been in this bear market for around 10 to 11 months. So there is the possibility where we do get a drop lower, but we could also consolidate for at least another year into the greater part of 2023. Just some food for thought. But that's everything I have for this video. If you guys found any value from it, if you found any educational value from it, definitely like and subscribe down below. And again, thank you for watching if you guys made it this far. Till the next video, see you guys then. Peace.